Good morning, traders. Today is July the 29th. My name is Neville Hornsey, market analyst with YouTrading, and today I'll be talking about the New Zealand dollar. Okay, starting with the YouTrading.com website. Here we have the Forex Heat Map, and as you can see, the US dollar is currently red across the board. So that's the weakest of all the currencies, closely followed by the yen. Only the dollar is weaker than the yen. Then looking down here, we've got the New Zealand dollar all in green. And basically all the commodities are, more bullish than they are bearish. So it's a risk on day to day, whereas, we have had, when we've had the yen all green, a risk off day. So today, risk on, looking for commodity pairs to do well against the US dollar. Okay, looking at the active trader platform, here we have the sentiment indicator on the left-hand side underneath the currency pairs. And you can see that 61% of traders are actually bearish the New Zealand dollar. 80% of the traders on this platform are bullish the US dollar versus the Canadian dollar. Right. If we go to the Canadian dollar, you can see that the USD CAD has broken down as the US dollar has weakened. And we can also look at crude and see that, as the dollar has been weakening, oil has been going up. So we should be seeing dollar CAD dropping. So these traders here that are 8% bullish the USD CAD are going to get absolutely squeezed out of their position. And I'm thinking the same for the New Zealand dollar USD. So as this bearish sentiment increases, those guys are going to get squeezed out. And I'm thinking we break out this consolidation period and then get back above the 200 period moving average. If we look to the dollar index, we've had several days of bearishness. Last night we closed at the lows. We've broken out of this rising channel, and now we're finding support at the daily 200 period moving average. The 20 and the 50 are flattening off or rolling over. So momentum is definitely, it was a grind higher in the first place. It wasn't as impulsive as the big move down here from June. This was the FOMC candle in June, where the FOMC, sort of meeting ended up being perceived as being hawkish. Since then, they've kind of talked back a lot of that hawkishness. And then last night was obviously perceived to be more dovish. If we get a close lower today, we could be below the 200. We could be even below the 50. And then we could unwind this volume gap here and then be back towards the $90 where we spent a lot of time before. Okay, so going to the New Zealand dollar again. We pull out a bit. We've been in this consolidation period, sort of grinding sort of sideways to lower since the beginning of the year. It could be perceived to be a bull flag. So the run up from sort of the pandemic lows, it was, quite extreme. And then we've just been sort of paused for 2021. A breakout, to sort of see this continuation go higher would be in line with the monthly chart. So if we go to the monthly, you can see that prices have been sort of just above the sort of 200 period moving average, which has been flat since 2015. But this rising 20, this rising 50 period moving average on the monthly chart, we're just about coming under the 200 period moving average now. So it's, we found support at those sort of short time or shorter term moving averages, and that was at 0.68. So if this is a bull flag, then you could do a measured move and say that it comes up and gets above these swing highs here and then closer to the 0.8, which then puts this double top from 2011, 2014 within reaching distance. So, this, if we do get a breakout above, if we go back to the daily, this sort of trend line. So if we get above 0.718 to 72, then, it could accelerate higher a lot quicker as we take out these swing highs. Looking at the oscillators, we have rising oscillators here. So the lows are getting higher. But if you see here, we had a significant low on the 20th of sort of June, and then again a month later on the 20th of July. And the oscillators did not confirm a lower low. So this is bullish divergence. And that also will give traders, reason to believe that, this price action is going to go higher. But ultimately, The RBNZ are likely to raise rates in August. They've reducing their asset purchases, so they're tightening their monetary policy. If they do, well, if they are the first to sort of raise rates, then this NZD will go a lot higher, a lot quicker. The Fed are basically still loose with their monetary policy, and maybe in August they give the markets a little bit more to work with at the Jackson Hole Symposium. But for now, I'll be looking to see the New Zealand dollar go a lot higher, a lot quicker. So if we go on to a smaller time frame, looks like we're going to be taking out 26th of July's highs. You could try and take a trade now and see if we can accelerate above this high, or you could wait for a sort of pullback. I'll just draw a line before seeing a continuation higher. At least then you can put your sort of stop loss under a sort of smaller swing low a little bit closer. Here, where would you put your stop loss? It'd have to be back down there, so the risk would be a lot higher for potentially a lot less gains. So at the moment, patience, maybe wait for a pullback in the New Zealand dollar, but ultimately for those long-term traders, I see this going higher. Okay, I hope that was interesting and useful, and I'll speak to you tomorrow.